That was our halftime report, and let's focus on the new kid on the block now. And shares of Go Digit listed at 286 rupees a share compared to its issue price of 272. It was a subdued listing so far, but the stock has picked up after that, almost 12% higher now from its issue price. My colleague Yash Jain spoke to Kamesh Goyal, the founder and chairman of the company, and began by asking him about the potential premium growth trajectory for Go Digit Insurance. Listen in to a slice of that conversation.
We as a company don't really work on the basis of some guidance or something like that. I think we by nature look for opportunities as they arise. It could be in any new product, it could be an existing product or a new channel. And that is how I think we look at business. And this listing is a huge milestone, but I think we work business for the long term, and that is exactly what we will do. Life and business is never a straight line. It's more like a roller coaster ride. I think we'll hit some highs, we'll hit some lows. But we will do what is really good in the long term for the company to the best of our ability. I think today on a listing day, that's one assurance I can give on behalf of myself as well as Digit to all our investors, and really thank them for their confidence. I think incorporating the company and getting listed in just about 7 years, somebody was telling me in the morning today that it seems to be like a first company to have achieved that. We are really thankful to God and all our customers and partners. But life will go on, huge milestone, but I think the journey continues.
Okay. I won't press you on the exact numbers, but sir, the industry has been growing at about 18%, 19%. You've been growing twice of that, at least if we take the recent numbers. Just wanted to ask you, could that kind of outperformance continue for the next few years to come?
Yes, I think, as I said, we don't give any guidance. We honestly don't know. And as I said, we look at things slightly more from a long-term perspective. If we see opportunity to grow significantly faster, we will. If we don't see opportunity to significantly grow, that's it. But we will do or run business what we think economically makes sense. And I know pressures of stock market and guidance all is there, but we just don't do that at all, yes.
Okay. So it's a 7-year-old company, as you also mentioned. There is a lot of investment when it comes to distribution in terms of digital infrastructure because, of course, it's digital native in that sense. Could the underwriting losses, at least for a few more years, continue because investments could be higher? And how soon do you expect to reach that break-even point as far as underwriting level is concerned?
I think both of us will have to go to an astrologer for these answers. As I said, we don't believe in doing any forward guidance. And being listed today, I think it's a promise I've made to myself. I'm not going to violate that today or going forward. I wouldn't want to comment on any of that because, as I said, 7 years back, somebody would have told me that in 7 years, as we are starting issuing our first policy, and we'll actually get listed. Not even 7 years. We issued our first policy in October. 6.5 years we'll get listed. I wouldn't have believed it.
Correct.
So life is, I think, full of surprises and also some unpleasant surprises. I think we're prepared for both. And in the long term, I'm sure our country will do well. Companies will do well who really think long term, and that's where we see Digit to be.
Last couple of questions, sir. Motor right now contributes 60%, non-motor contributes 40%. A lot of analysts see that as a risk because if something goes wrong in motor on the pricing or on the industry, it could take a bigger impact on the company. Do you see more diversification coming onto the product portfolio, moving a little away from motor and entering other segments like health and so on and so forth? And what is the ideal product mix that you would aspire to have in that sense?
So, Yash, I think in all my investor meetings and analyst meet, I say I've been in insurance for 36 years, worked in many countries. In my understanding, there's no ideal product mix. In my understanding, there's no ideal channel mix. What is profitable today might not be profitable tomorrow. What is unprofitable today might be profitable tomorrow. So we don't believe in having any of this. If motor offers more opportunity, we become 95% motor again, we won't mind. If motor is not offering opportunity from 60, if we go down to 20, we won't mind. Because all this will depend upon the opportunities we see in the market. And that's the message I think I've been also conveying.
Okay. On the geographical distribution side, about more than 55% of the revenue comes from 3 states. God forbid if there is a large catastrophe incident in any of these states, it could have a bigger impact on the company. In terms of your increasing geographical reach, the next 2 to 3 years, how do you see that panning out?
I think in geographical reach, the only comment I'll make is that you could have some very large industrial business groups who have assets all over India. Say somebody is in solar or power plant and they have assets all over India, but their head office is in Mumbai or somebody's head office is in another state. And all the business of all the assets which are there gets booked in one particular state. So I think this geographical spread to a large extent comes out of this. It's not really that the assets are also allocated or located only in this top 3 states. That's the only thing I have understood about this business, and that's the answer I can give you, Yash.
One big trigger for motor is going to be, the freeing up of motor third-party rates, which continue to remain regulated. If that happens, you have 60% of your portfolio coming from motor. How much would it help a company which has a high concentration on motor and is growing at a very strong pace?
I think as a company, we believe in freedom in pricing, freedom in product design. So anything regulator can do to make this pricing freer is more than welcome. I think the bigger challenge for the industry is that in the last 4 years, we have only seen price increase in one. So while the Motor Vehicle Act itself provides for minimum compensation going up by 5%, I know there is inflation. So I think in my personal view, I feel that time has come either regulator to really look at the pricing seriously or if they have any compulsions, just to make it free pricing and let the market decide. But having in this situation where you are controlled but the pricings are not increasing, I think it's a slightly difficult place to be in.
Right, interesting conversation coming in from the management of Go Digit. Recent listing opened slightly subdued and thereafter has kept its pace up and now up around 13% from its issue price. The stock at close to around 307 rupees. What we'll do is take a short break, come back on the other side. We'll speak about another big mover, albeit not in India. It's Nvidia, which has clocked in an unimaginable 600% growth in profits and guides for even a stronger quarter, much more than what most expected.